All right, so welcome in. I just wanted to do a quick look at the Nikkei and USDJPY in what I believe could be a fairly significant cycle that's upon us here. Now, I'm a big student of market cycles in general and business cycles, and one thing that really grabbed my attention over the years is Armstrong's economic confidence model. So he's a very interesting fellow. He served time in prison. We won't go into all the details of that, but basically he came up with a very, very interesting model based on sacred geometry using pi. So he uses, 314 and the 8.6s, things like this, quite a lot within his work, right? And here's just a quick look at this economic confidence model that he derived out, and he very successfully called the last great recession, right? And so he was really calling the peaks and the troughs in all of those big downturns that we last suffered in the last one. Now what you find is, again, that we've just hit the peak all the way up here, right, on 2015, which was October the 1st, 2015. So we'll look at UJ in a second and look at that. And what happened, we had a big downturn in terms of, price, and then we've had a pullback and we've had what I would call consolidation. And now, 2017.9 was the next peak for him, and that comes in at November the 20, hang on, I have to remind myself here, sorry, November the 24th, 2017. And what I called out here on this tweet was look for shift in market structure. So look across all the markets, and what I have found so far is that Japan has been a bit of a leading indicator when it's come to looking at these cycles. So you don't see all markets and all asset classes sort of sticking to this model. What I've found, at least, is that UJ and the Nikkei has been quite a good indicator of things to potentially come, right? A bit of a leading indicator. So if we look at the charts in a second at UJ, we'll look at these two extreme peaks, right? So let's just take a peek back first of all at these two peaks here, right? So we'll look at the 2015.75, which is October the 1st. So let's just dive over to our weekly charts on USDJPY. And so here we have, just roughly speaking, right, it's the beginning of November. It's not quite perfectly on there. Let's just do that now. So let's just move it to the 1st. Is here, and what you notice is, right, you got a shift in market structure, right? We can see it now in hindsight. Of course, it was the top of the market, but if you notice here, right, we have this breakdown here that takes place, and then she fails to make a higher high in the market structure, right? So she's made a new lower low, in my opinion here. She's broken these significant lows. She's had the pullback, failed to make a new higher high in market structure, ultimately gave up the ghost. So we've had a significant pullback, which again, if we come back to looking at these, right, so this would be the significant pullback leading up to the end of 2017. We had a lot of rangy, choppy action in here, as we know, right? Last year was pretty difficult to trade, in my opinion, and things started to get compressed down, right, quite heavily here coming into the end of 17 again. And if we just come down to a daily chart, you then notice, right, so here's the 24th, which is the next peak, which is up here. And what do we notice again? Do we notice any shift in market structure? Well, we do. We see a breakdown again, and then it fails to make a higher high. So we had the same occurrence happening again, right? So this is the first piece of the puzzle for me that I was adding up. Now, she's gone bid and she's had a decent pullback, and this is my question now to Miad and speculative traders, which is why I wanted to do this sort of collaborative video. So I'll just introduce Miad to you now, right? So he's doing a lot of fundamental study and analysis. He's got a subscription service that I'm a part of, and I'm learning a hell of a lot from this guy, and I highly recommend what he's doing and what he's up to. So speculators trading over here, right? And so the question I wanted to pose to you now, Miad, is where you think this is going next, because according to the model, right, if we just jump back to that, so according to the model, we should now be in basically a 2-year downtrend. according to this. And what I've actually found is this peak to trough is significant, but it's that second leg down that's actually usually the most painful and the fastest. So coming back here, right, 2007 down to 8, and then back to 9. It was 2009 where, you know, there was a lot of blood on the streets. So my question to you now is what you think is going to happen next in this story, and if we can prepare ourselves for that, because we've hit this second pullback and peak, and this, by the predictive model, is going to take us all the way down, right, to 2020. So this is a fairly long cycle leg now, potentially kicking in. So based on this, what do you think's now going to happen with UJ? Are we potentially going to see a bigger short squeeze higher, would be my first question. I don't know if that's an answerable question. To try and get back on board this, because I think everybody is eyeing up, right, the 105s down here back into this prior consolidation down here with the thin price and the moves, and we've got a fair amount of support down here and a beautiful inflection point. Do you think that's going to be it, or do you think we might now see something even more significant come in and potentially, you know, something really major to sort of complete this potential entire rotation further down? I mean, if we look back on UJ historically speaking, right, just on FX, on this crappy little retail broker, you see these rotations are fairly hard and fast, right, on these down legs. And you know, if you look at that cycle here now, it hasn't really started, has barely begun, despite that sell-off. So I am aware that, you know, liquidity has been becoming less and less. I thought maybe you could add to that story and narrative as well. You know, the markets are definitely compressing down, liquidity is becoming less and less. Thought maybe you could give me some insight into that aspect as well, because technically, you know, we have a fairly decent target down here, right, to try to get on board now. My question is, do you think we're then going to break down below that and potentially go for some crazy sort of moves, right? And just to finish off, right, if we just, you know, it's just trading view charts of Nikkei, but it goes back quite far, right, to the 85s, in fact all the way back to 84s. So if we look at this from a technical perspective, for me, I'm usually in two minds when this happens. So what we've is this is what I call a rotation, right? So this is a big old rotation down, and then you see bearish market structure continuously. So lower lows and lower highs forming. And now what's happened is we've had this cheeky move up, and it's running all of the old highs back into this key level. So it was the 24K mark is the one that I was calling out for some time now in this up move, and I've been benefiting from that, so I've positioned long. And now I'm wondering, right, we've reached back to this key level, and it would be the perfect time, we've run all of these old highs, for this to now have a downturn. So I'm really wondering what your opinion is here now, with the Bank of Japan and everything they're up to, because you had some really great tweets recently and some insight about what the Bank of Japan had just announced. They're going to start fiddling around with their 10-year yields again and things like this. So I think this is a very, very key, interesting level right now, and I would be very excited to see if we could try to collaborate a bit further to position ourselves correctly for what I think could be a fantastic opportunity. So I'll leave it there and hand over to you to see if you could shed some further insight and light onto this, what I believe could be a big opportunity. So thanks very much.
Hello traders, my name is Miad. So David brilliantly showcased Armstrong's economic cycles in a business. It shows time and time again that how accurately price seem to follow those models. So it stood a test of time as well. In 2015 October, dollar yen literally crashed. We haven't seen those prices ever since. And this time it's showing that there's possibly another leg going further down, again as shown in David's video. In the second part, we're about to examine how far lower it can go, what are the drivers, and what's the logic behind current market behavior. The most apparent theme right now is the Bank of Japan's yield control. by controlling the bond yields, they're actively pushing the yen lower, and which means USDJPY higher. However, over the past few months, we've seen that they are not as active as they used to be. That means they're letting the yield slightly rise a bit higher from what they usually used to do, which tells us speculators that there's a shadow tapering going on. Other thing that's right now very apparent in the market is Japanese investors and global investors all over the world seeing the strong economy in Japan and starting to actually invest into it, which is why you're likely going to see the Nikkei won't correlate as closely as it used to with dollar yen. In the past, we've seen Nikkei was literally leg by leg following dollar yen, or the other way around. Nikkei used to be the leading indicator. It's not the case anymore. Times are changing. Money flows are changing. The people that invest the money start to think a bit more differently. If the Bank of Japan isn't going to provide as much as easy money as it used to anymore, Japanese investors have to be much more calculated in their moves and where to put their money. Two, the other side of the cross is the US dollar. And in a scenario or in an environment where global growth is booming, dollar traditionally goes lower, which will help USDJPY going lower as well. And this is our base case as shown in the economic cycle as well. However, same thing that happened in 2016 when yen was rallying. The Bank of Japan starts to get agitated. They would like to keep the yen a bit lower because it helps the exports. However, there's so much they can do, because if investors are constantly moving money back into Japan, there's very little power they really have over such great inflows. So we're going to see speed bumps along the way where Bank of Japan intervenes, just like they done last week by saying that they're going to increase their yield control, and you saw it put very smartly a floor on dollar yen, but it's very temporary. In the end, money flows always wins. Banks can't intervene forever. In terms of time, global growth picks up, and it has already been picking up, and we see inflation seeping into a lot of the economies around the world. You see commodities rising and stuff like that. Small things cost a little bit more in the supermarkets, so when outside our trading, we really feel it. And the same thing happens with people investing. So there's probably going to be a cycle somewhere stretching between 2 to 10 years. I'm not saying that the dollar yen is going to be dropping for the next 10 years, but it's very likely that for this year and the following year, it's going to be a structural downturn. In terms of price and price levels, we see immediate retracement or pullback into 105, which is also an inflection point. However, given that current euro surge, we're likely going to see 103 as well, as euros going up, dollar will immediately go down, automatically helping USDJPY going down lower as well. Past that point, I'm a bit skeptical. At this point, I will know a bit more once we're actually going to be in this situation. But it's very likely, being Bank of Japan is gravely concerned about the yen rallying too much, they're going to start intervening in much heavier ways and start implementing ways through either language, jawboning, or actually changing policies to make it a bit more difficult or different for Japanese investors or global investors trying to buy yen too much, and they're driving their pair lower. I hope you enjoyed this video. Me and David both are obsessed with the markets. We really enjoy what we do. We love finding the logic behind these major trends that pushes price along for hundreds and thousands of pips. And we hope to do more videos like that in the future as well. So your feedback is greatly appreciated, and I hope I'm going to see you next time as well.